Do you constantly feel the urge to check your Acorns account? Is it a daily habit, a weekly glance, or something you only think about once a month or even less frequently? Are you worried that if you don't check it constantly, you'll miss out on something important, or perhaps, worse, lose money? Or maybe you're on the other end of the spectrum, completely hands-off, wondering if you should be more engaged. These aren't just idle questions, they get to the heart of a common dilemma for new and experienced investors alike, especially with platforms like Acorns that simplify investing. The truth is, the right answer isn't a one-size-fits-all solution. It depends on several crucial factors: your investment goals, your risk tolerance, your understanding of how Acorns actually works, and perhaps most importantly, your psychological relationship with your money. Let's be honest, in today's hyperconnected world, with real-time updates and constant financial news bombarding us, it's incredibly tempting to obsess over our investments. Every tiny fluctuation, every market dip, every slight uptick can feel like a personal attack or a missed opportunity. This constant monitoring, however, often leads to what's known as emotional investing, and it's one of the quickest ways to derail your long-term financial success. Acorns, at its core, is designed for long-term, passive investing. It's built on the principle of dollar-cost averaging, where you invest small amounts consistently over time, regardless of market highs or lows. This strategy is incredibly powerful because it smooths out the inevitable volatility of the market. When prices are high, your regular contributions buy fewer shares, and when prices are low, your contributions buy more. Over the long haul, this approach can lead to significant wealth accumulation. So, if Acorns is designed for the long game, does that mean you should just set it and forget it? Not entirely. There's a sweet spot, a balance between being completely disengaged and being overly obsessive. Let's break down the different ways people approach checking their Acorns accounts and explore the pros and cons of each, helping you find your own optimal frequency. First, let's talk about the daily checker. You know who you are. The first thing you do in the morning, coffee in hand, is open the Acorns app. You scrutinize every penny, every fractional share. You ride the emotional roller coaster of the market with every tick. While it feels like you're being diligent, this level of engagement is often counterproductive. The primary pitfall of daily checking is emotional investing. When you see your account balance dip, even slightly, it can trigger fear or panic. Your instinct might be to pull money out, to cut your losses. This is precisely the opposite of what a long-term investment strategy like Acorns advocates. Selling low locks in losses and prevents your investments from recovering when the market inevitably bounces back. Conversely, seeing your balance shoot up might tempt you to invest more than you can comfortably afford, or worse, to try and time the market, a strategy even seasoned professionals struggle with consistently. Daily fluctuations are normal. They are part of how the market functions. Acorns portfolios are diversified across various ETFs, exchange-traded funds, which inherently reduces some risk, but they are still exposed to market movements. Constantly checking these short-term movements can lead to anxiety, stress, and poor decision-making based on fleeting trends rather than sound financial principles. It's like checking the weather forecast every 5 minutes when you're planning a trip 6 months from now. It's mostly noise. Now, let's consider the weekly or bi-weekly glance. This approach offers a bit more distance from the daily noise. You're still engaged, but you're less likely to react to every minor tremor. A quick check once or twice a week allows you to see the broader trends, to notice if your contributions are being processed correctly, and to feel a general sense of awareness without getting bogged down in the minute-by-minute drama. This frequency can be beneficial for those who like to stay somewhat informed without letting their emotions dictate their actions. It allows for a more measured response if something genuinely significant happens, like a major market correction or a prolonged downturn. You can acknowledge the movement without feeling the immediate pressure to act. It's also a good cadence to ensure your roundups and recurring investments are functioning as they should be, and that your linked accounts are still connected. Moving further out, we have the monthly or quarterly review. This is often cited by financial advisors as a more appropriate cadence for long-term, passive investors. Why? because it aligns more closely with the inherent nature of Acorns and the broader market. Acorns automatically rebalances your portfolio. This means that if one asset class performs exceptionally well and becomes a larger percentage of your portfolio than your chosen allocation, Acorns will automatically sell a portion of that asset and reallocate the funds to underperforming assets to bring your portfolio back to its target risk profile. This happens behind the scenes, without you needing to lift a finger. This rebalancing typically occurs on a quarterly basis or when a significant shift in asset allocation occurs. A monthly or quarterly check-in allows you to review your statements, which provide a comprehensive overview of your activity, earnings, and fees. This is where the real value lies. You can see your overall growth, track your contributions, and understand the impact of compounding over a longer period. It allows you to step back and appreciate the forest, rather than getting lost in the trees. This frequency also provides enough time for market noise to dissipate. Short-term fluctuations tend to even out over a month or a quarter. By reviewing less frequently, you are less likely to be swayed by temporary dips or surges and more likely to focus on your long-term goals. It reinforces the idea that you are investing for years, not days or weeks. Finally, there's the set it and forget it approach. For some, this means truly forgetting about it, perhaps checking only once or twice a year, or even less. While Acorns is designed to be hands-off, a complete lack of engagement can have its own drawbacks. The risk here isn't emotional investing, but rather a lack of oversight. While rare, technical glitches can occur, linked accounts can become disconnected, or subscription fees might change. If you never check, you might miss these issues, which could subtly impact your investment growth over time. Additionally, your financial situation and goals might change over the years. You might get a significant raise, have a child, or buy a house. These life events could warrant a review of your risk tolerance and portfolio allocation. If you never look at your account, you won't be able to adjust your strategy to match your evolving needs. So, what's the optimal frequency? For most Acorns users, a monthly or quarterly review strikes the best balance. It's frequent enough to stay informed about your progress and catch any potential issues, but infrequent enough to avoid the pitfalls of emotional investing. With that said, thanks for watching and until next time.